Hello and welcome to Beyond the Noise, the podcast series from PRWeek. I'm John Harrington, the editor of PRWeek UK. I'm joined today by Deputy Editor Siobhan Holt. Hello Siobhan, how are you?
Hi John, I'm well, thank you.
Good. This week we're looking at the global mergers and acquisitions market and the big trends comms professionals should know about. New research by Merger Market points to a general fall in the volume and value of M&A deals in the first half of 2025, where comms agencies offered support. Having said that, separate data from DealLogic points to a 29% year-on-year growth in M&A by dollar value in H1. There's talk of companies adjusting to a, quote, change is constant mentality. So lots to talk about here. Clearly, it's been a turbulent time in M&A for reasons we'll discuss. But how are things going in H2 and what does it all mean for our industry? Our guests this week both work in M&A for major consultancies. Firstly, Oliver Mann, who is a partner at Kekst CNC's London office. Hi, Ollie. How are you?
Very good, thanks, John.
Good. And Finlay Donaldson, Associate Partner at H Advisors Maitland. Hi, Finlay. Welcome on board. Hope you're well.
Thank you so much, John. Yeah, very well, thanks. Hope you are too.
Good. Yes, not bad. So I'm going to go straight into questions on this big topic. First question, how important is M&A work at your agency at the moment? And how has this changed over the past couple of years vis-a-vis other services you provide? Finlay, would you like to go first?
Sure, thanks, John. Yeah, I think M&A will always be a very central part of what we do in financial comms. There's no getting away from that. I think what we've seen in the last couple of years is a slight shift away from maybe the more traditional listed M&A type work that we would have done. We're definitely seeing more of a shift towards the private capital firms. I'm sure lots of people in the industry are. We did some analysis recently and the uptick over the last couple of years in private capital clients was close to 30%. So clearly, those firms, they have capital to spend. They're looking to do M&A, they're looking to do buy and build and acquisition strategies. So we're seeing a great shift towards that type of client and that type of M&A, more on the private side than potentially a few years ago where it might be a bit more public M&A.
Sure. And Ollie, have you noticed similar trends?
Yeah, I fully agree with Finlay. Obviously, we pride ourselves also on our private capital work, and a lot of the M&A flow comes from exactly those clients. I think for us, it remains a completely critical part of what we do. And if at all, it's become, more interesting, more fun. The complexity, as Finlay mentioned, has kind of increased. We're seeing more work that's integrated, not just with, digital or around AI, but all the kind of classical kind of service areas such as public affair, regulatory work also.
Yeah, I'd agree with that. What's been really interesting as well with that, shift towards more private capital is there's clearly been a bit of a reputational challenge for firms in that space. A bit of skepticism, I would say, and, increased scrutiny from, as Ollie pointed out, from government, from consumers, from every audience that you might think as a comms professional. So there's been a big reputational challenge as well from a comms perspective in supporting those firms and supporting that type of M&A.
Yeah, interesting. I'm going to jump in then. So how would you describe the global M&A market in 2025 and how has it developed across the year?
Yeah, listen, I think as I think we were talking about earlier briefly, the value of deals is up, volumes continue to be on the lower side. What M&A really needs is a really consistent framework to kind of operate in, and that's just not been the case over the last few years. So we've had a lot of our clients kind of focusing on M&A, but focusing on M&A doesn't allow them necessarily to kind of get the deals over the line. That's in the private markets world as well as in listed M&A. I think the appetite for M&A is consistently high, just the framework that we operate in is not. Windows open occasionally and good M&A will still happen, but that kind of volume piece we're just not seeing currently.
Interesting. Have you noticed the same, Finlay?
Yeah, I think so. I think obviously when there's big market shocks like Liberation Day, clearly global equity markets are impacted. So there will be investor skepticism about deals being done. But I think much like in the aftermath of things like COVID and the energy crisis, there is still capital that needs to be deployed, whether that's private capital or on the actual equity markets. There will still be good deals done, as Ollie suggested. So I think as the markets seem to have recovered a little bit since Liberation Day, particularly in the US and Asia. So I think there will still be deals done in those markets. I was reading a PwC report just the other day that I think suggested that equity raised from IPO capital in the US and Asia was up by nearly a fifth compared to last year. So where the equity markets are getting stronger, there will still be that M&A being done.
It's really interesting. And you mentioned, obviously, Liberation Day. This is Trump's tariffs, famously. It would be good to sort of maybe look at other geopolitical factors as well as the tariffs, which were obviously absolutely huge in their impact on M&A, and whether these are still having an impact. What other sort of factors do you think are shaking things up a bit when it comes to M&A?
You've obviously got Liberation Day and what Trump has been doing, but I think it's also worth looking at what the knock-on effects of some of those things are. I was actually at a client's investor meeting earlier this year, and there was a former UN Secretary General speaking. And the point that he was trying to make was that, NATO allies in Europe, as a result of some of Trump's tariffs and other policies, are having to consider a future where they're not overly reliant on the US. And obviously, the headlines for that are investing in defense, but I also think it'll mean investing in other areas like industrials and manufacturing and things like that, so that we're not overly reliant on investment and support from the US in future. So I think what that'll mean is, and it may well be driven by private capital and private investment, but a much more Europe focus from European investors rather than over reliance on the US in future.
Yeah, no, I would fully agree with that. I think, geopolitics is just one of the major building blocks of the uncertainty piece that I was referencing earlier. I think countries more generally are more inward looking, very, very careful to scrutinize foreign direct investment of any sorts. So I think, that will be a continued trend. I think the competitive and enforcement of the regimes of certain countries, again, they'll look at antitrust very, very carefully. What does that mean for us as comms professionals? It just means working far more closely and far more integrated with our public affairs and regulatory clients, not only in the countries that the deal is necessarily happening in, but also in the kind of the bodies that matter elsewhere in Brussels or in the US in terms of antitrust and others. So the drive towards integration and making M&A comms a much broader part of what we offer will continue.
So my next question is that we seem to see that private equity buyers seem keener on acquisitions. A recent bit of research from Dealogic showed that global private equity acquisitions increased more than 40% by value in the first half of this year. So I'm just interested what your take is on private equity interest at the moment.
Well, I mean, listen, it's their business model, right? So private equity is interested in transactions and doing deals, and that won't change. Obviously, again, uncertainty has made exiting of businesses, buying of businesses for those firms, more and more difficult. And we have seen a slowdown, but that won't last. And you've seen some really, really good transactions over the last couple of years and even months. And I think the trend in terms of value and volume is up. I think 40% in the first half of 25 alone in terms of value. So I think we'll continue to see that. I think we'll continue to see private equity going for larger transactions, for more complex transactions, and most crucially, private equity has also started to be innovative about their transaction work, right? So when the kind of classic exit routes kind of are no longer there for whatever reason, in terms of uncertainty, we've seen quite a few transactions in terms of continuation funds, in terms of minority stake sales. All of these kind of transactions come with additional communications challenges that which need to be catered for, very carefully.
Yeah, completely agree with that. And I think the other thing that you have to bear in mind is we've spoken about geopolitics and economics, but we're in an economic environment that private equity hasn't really faced for some time. When you have very low or zero interest rates, it's relatively, I'm not saying straightforward, but you can buy a decent performing business and use cheap debt, and you can hold it for 5 years, and it's probably going to be worth more at the end than it was at the beginning because of the investment that you've made using that, using leverage and other tools. But in an environment where you no longer have that, and you've also got a liquidity squeeze on your institutional investors who might not be able to reallocate to future funds, there's a far greater focus, I think, on performance of individual deals and performance of the fund overall. So the focus on value creation from private equity investors is much greater than it was before. And one of the key tools in the private equity toolbox is buy and build, and a quite aggressive M&A strategy for each portfolio company that they own in a specific fund. So what that means for us as comms professionals is, as Ollie pointed out, for each of those portfolio companies, we're working on several transactions where they're bolting something on and having to really prove the value of that investment to that individual portfolio company, but also to the fund itself, so that when they're communicating with their investors, they can say, this fund performance has outstripped the predecessor and the previous vintages, so invest in our next fund. And I think what that means is that our focus as comms professionals is, how is anything that private equity or private capital fund is doing, how is that impacting performance, and how are we creating value for you as the end investor? So all of the communications really are targeted at that audience, at the end investor, the institutional, the pension funds, etc.
Just as a follow-on from it is the kind of gap that we saw over the last 2 years between seller expectations and buyer expectations. The uncertainty in the market made it really challenging to measure what the right price should be, and you'll see in many kind of communications that that is indirect with media, that the kind of expectations from sellers and the expectations from buyers what the right price would be is different. I think that gap is closing. So with that gap closing, that also means more room for transactions and arguably also for faster transactions.
Yeah, well, I mean, what you both say just bring on to an interesting point. It'd be good to talk a bit more about how your approaches to communications around M&A has changed as the nature of M&A has changed in recent times. Finlay, you obviously sort of touched on it a little bit, but it'd be good to sort of talk a bit more about how your strategies have changed.
Yeah, I think my experience, I've been in this for 10 years. When I first started working on M&A transactions was, we would work up until the point that the transaction closed in a lot of cases, and then it almost felt like job done. Whereas I think now, obviously there were some examples where that wasn't the case, but I think now there's much more of a focus, and Ollie's already alluded to it a great deal, I think, on the whole life cycle of that transaction, including the post-merger, the post-closing of the deal. And obviously that includes things like public affairs. A few years ago, we acquired Cicero here in London to help with exactly that. But I think also practice areas like transformation and change and internal communications have become increasingly important. And I think where it alludes to private capital, we spoke earlier about increased scrutiny, increased potential skepticism about ownership from those types of investors. So I think that, that employee message becomes increasingly important post some of these deals closing. So we're having to offer a much more integrated product to any potential clients in this space.
Yeah, makes sense. Ollie, has it been the same for you?
Yes, I totally agree. For us, it is a totally integrated part of what we do, and that's really, really rapidly changed over the last 18 years that I've joined the world of comms from journalism. In the olden days, there was a specialist group of people that kind of dealt with transaction work. Now it's a fully integrated piece of what Kekst CNC does. That starts with due diligence and looking into all the challenges that a transaction might face and preparing adequately for all situations that might arise. Of course, data insight, AI tools are becoming more crucial to kind of recognizing those challenges. Obviously, the deal narrative and how it kind of fits into the overall business and what the sense behind it is. The deal announcement remains absolutely crucial to kind of get that right in terms of timing, and that's where most really the deep-rooted M&A specialism remains most crucial. But then, as Finlay says, it doesn't end there nowadays. You have to get all stakeholders on board, from internal to external, and then also to explain the kind of value add that you bring after you've taken over any business. It's crucial to kind of tell that kind of story of success, because nowadays a transaction is not measured by the transaction. It's kind of measured by the long-term success, the long-term impact that it has. So that's all things that now lie partially with communications, and our work has kind of moved much closer to the center, I would argue, of any M&A transaction.
Brilliant. You mentioned there a lot of change. I'm just wondering if you're planning to launch or invest in any new offers or services or specialisms to attract more M&A work going forward.
It's a really good question. I think any firm in this space continuously try to look at the areas to improve. I think for Kekst CNC, I think we're in a very, very strong position, based on 50 years experience in this space and kind of trying to stay at the forefront of things. I think we did a heavy investment in kind of digital, over the last 10 years or so. So that's no longer anything new. I think the newest part is really twofold. One, AI and being able to kind of analyze relevant stakeholder groups more effectively and kind of using those tools to speed up things, to be, to be able to be very proactive in that area. And then second was really around PA and regulation and the relevance of that. I think it's no longer really possible to kind of successfully advise on a deal if you haven't got some, really deep-rooted expertise in that space. Again, supported by AI and other tools, but, the knowledge and experience of colleagues across the globe, but obviously in the key kind of markets that matter, are crucial.
It's probably no surprise to hear that AI and data are a big area of investment for everyone over the recent years. I think, as Ollie pointed out, what that does help us to do, and what we're always trying to do when we're working on these types of situations, is to allow for a much greater, speed of execution, the ability to monitor more effectively, the ability to respond as quickly as we can to any new complexity that might arise with any deal. I think also, as Ollie pointed out, areas like public affairs, transformation and change, ensuring that we can support on the whole life cycle of a transaction is increasingly important for clients as well. I think the other thing that's worth noting is that clearly we're trying to support the sourcing of these types of transactions. And where we've put a lot of investment is in the strength and the relationship between some of our global offices. Being part of Havas and H Advisors, we do have strong kind of local market expertise, but it's about how do we source more opportunities from those local markets and bring them across to London or to Singapore from New York. So ensuring the strength of the network, I think, has allowed us to offer a client in New York and say, okay, you're acquiring something in London, you're acquiring something in Europe, let's bring our London colleagues on, let's bring our Paris colleagues on, which inevitably we hope would result in additional fees, additional services, and actually an ongoing relationship perhaps for that market as well. So I think international investment has been crucial as well.
Yeah, I think Finlay makes a really important point, which is that most of the large transactions that, we've all been working on are cross-border. So it doesn't only matter what Brussels thinks or what the US thinks or what certain Asian regulators might think, but it is also the kind of global kind of combined narrative that really matters. And to have experts located in those regions, but more importantly, not work in isolation, pull them together and kind of come up with a narrative for any kind of transaction that kind of works across all those areas and stakeholders is, I think, where we'll continue to invest in. It's our heritage. It's how we kind of built the firm. But I think it's really more crucial than ever.
Yeah, really good point about the geographical elements. I'd like to talk about sectors as well next. I mean, have you noticed from the deals you've been overseeing and your organisations have been overseeing that certain sectors have been keener on M&A this year and others have been less keen? What have been your sort of main reflections on that?
Yeah, it's a really good question. And I think fundamentally speaking, a good business can be sold almost independently from what sector they're in. But I think no doubt that we've seen especially kind of activity in tech, most probably AI infrastructure, software, data centers is really massive, but also in energy and energy infrastructure. I think we've seen a lot of activity. I say more and more also in financial services. I wouldn't say back, it's never disappeared, but I think there's M&A activity there that we've seen quite a bit of. On the kind of cooler side, I think it's clearly businesses that have been most impacted by the tariffs and by the uncertainty in the market. So, certain industrials and others. But again, I don't think that really impacts deal flow when the stars align.
As you say, Ollie, there will always be M&A where there are good companies. So regardless of the sector, that there will be deals that are done. I think there are those sectors that tend to perform well, whatever the position in the cycle that we're in. So things like healthcare, energy transition, tech, specifically things like software, I think will always perform quite well. Financial services is a really interesting point. I think consolidation in the financial services industry has definitely been ticking up. We've been seeing big asset managers are trying to diversify their offering a bit, look into new asset classes, particularly things like private credit, where there's a massive amount of growth at the moment, or potentially things like infrastructure. I think we saw last year a few big deals for the likes of BlackRock, etc., acquiring quite big infrastructure managers. So I think that consolidation in that industry will continue. And we flagged it earlier, but I think the defence sector, there will be M&A in that space. NATO allies in Europe have committed to a massive percentage of GDP being invested into that sector. So I think private capital will probably support that as well, but I think there will be an increasing amount of activity in the defence sector as well.
Yeah, for sure. And I think, John, I think one thing that you'll see here is that all the sectors that Finlay and I have mentioned are highly regulated. That kind of regulatory challenge, which we described earlier on in terms of having support from regulatory experts within our teams, but also working with the regulatory teams of our clients, is kind of such a crucial pillar now for all M&A support.
Yeah, absolutely. And I think also the other thing to flag is that, I mean, defence particularly is proving quite challenging from a comms perspective. We've noticed it particularly through the lens of the private capital clients, but trying to marry up things like ESG and sustainability and responsible investment with sectors like defence is proving to be quite a challenge. But where you have a requirement from certain countries to meet a certain level of investment, there is the expectation that private capital will come along on that journey as well. But it's about, we have an in-house sustainability team, and it's like, how do we marry up investing in defence and our responsible investment policies? So there are additional challenges there as well.
You mentioned challenges there. I'm just wondering, and we have touched on this briefly as well, but how has PR's relationship then with investor relations developed in recent times?
I mean, in M&A, to be honest, it's always been a really important relationship. And I think as soon as we start supporting on a transaction, the IR team and the comms team are essentially one. And I think that's kind of best practice and the way it should be. I think more generally speaking, IR and PR and IR on comms have moved much more closely together. And if you think about the reasons for that are really obvious, right? It's communications is become more multi-stakeholder, and one voice towards all those stakeholders really matters. So bringing those two together even more closely, and arguably even having one advisory team advising them with IR colleagues or M&A colleagues that are deeply rooted in that space makes total sense.
But yeah, absolutely agree. I think in most cases on an M&A transaction, it's hard to distinguish between the PR and the IR teams. We're working so closely together, and as Ollie says, they will always be a crucial part of that process. I think where it might have changed a little bit is just with this uptick in private capital M&A transactions. As we described earlier, the ultimate responsibility of the private capital firm is to return money to the investors. So, I think from that perspective, it just becomes an even more crucial relationship. From a comms perspective, when you're doing your messaging, how is this going to be perceived by the investors? So from that perspective, you're working in such an intertwined manner with IR anyway, that it's impossible to separate the two, to be honest.
Yeah. Well, there's some really good insights you've both given into the sort of nature of M&A and how comms works with other parts of the mix. But it'd be good to give a couple of concrete examples, really. I mean, could you both give one example of an M&A deal that you or your agency's been involved with in the past year, and what that kind of tells you about the nature of the M&A market and comms at this time? Ollie, would you like to go first?
John, apologies. We kind of never really kind of comment on specific transactions. As you can imagine, a big part of what we do is confidential, so it would be difficult to pull out one. But I would like to kind of just talk briefly about, some of the things that actually Finlay mentioned, especially in private capital or private equity deals, where, focus on more innovative kind of exit routes for businesses such as continuation funds or partial exits. These do come with quite different challenges, and explaining why a private equity firm remains a minority shareholder, why this is sensible both for the LPs in the fund but also for all other stakeholders involved, not least the kind of business that we're investing in, and especially around continuation. Also, there's common challenges that come with that. What does that mean? It kind of again means that even from the earlier stages of a transaction, transaction. We look at all the kind of different areas where this deal could be heading. Mostly, that hasn't been decided at the starting point. So to look at all the options that are on the table and to kind of look at the stakeholders that might be impacted by any decision that may be made along the road, and really think around the messaging that could be most sensible to support the deal and the success of the transaction. So those are the things that I think we've been seeing, much more of over recent years. And again, bring the different teams together internally to provide that holistic advice to our client is important. I think purely from a kind of dynamics perspective, firms like Kekst CNC and others see hundreds of transactions a year, so can really understand the nuance in the challenges that our clients may face. Our clients often only see, one transaction every, 3 or 4 or 5 years, right? So being able to come to the table, I guess, almost open the eyes to the challenges, but also the opportunities that lie ahead is all part of the job.
Sure. And Finlay, could you give an example?
I am going to give an example. It was a public transaction, so hopefully it's all out there. So I'm not going to be revealing too many trade secrets on this one. But it was early this year. We worked with quite a long-standing client, Foresight Group, which is backed by private capital. They acquired Harmony Energy Income Trust, which is London-listed investment trust. I think it's a sector that's had some well-documented issues, given the macroeconomic environment, the lack of liquidity, interest rate environment, not particularly good for the renewable energy sector. But I think because of the lack, undervalue on the UK market, there are some really good opportunities to be had if you have the liquidity and you have the capital, like with someone like Foresight that has, that kind of private capital backing. So essentially, they saw it as an opportunity to snap up a really good portfolio of battery storage assets. It's something that's quite supportive of their overall portfolio that they have anyway. There's quite a lot of synergy between the battery storage and the general renewable energy assets. And essentially, they managed to get that at quite a cheap valuation. And I know that take privates haven't really taken off in the way that we potentially thought they would, particularly post-COVID. There was a bit of a flurry. We haven't quite seen that in quite the same way. But yeah, it's demonstrative of the type of transaction that can be done where there is a slight lack of value in a particular market. I think what's also important with this one is that, as both myself and Ollie have alluded to throughout the whole of this conversation, is that various parts of our team were involved in that as well. It wasn't just the client team that work on the retainer for Foresight. It was the transformation and change team. It was our public affairs colleagues at Cicero trying to work on the stakeholder management essentially throughout that whole process, pre, during and post the transaction, which is still ongoing.
Okay then, so what are your predictions then for the M&A market for the rest of the year? Who wants to go first?
Yeah, I mean, you're asking two comms advisors around the activity in the M&A market. I'm sure there's banking colleagues that would be better placed to do so. But I think kind of the general view is that I think we'll be coming back. I mean, it is already back, but it will be coming back even more so over the course of this year, but most probably more into next year. I think we'll continue to see kind of larger transactions. So the value piece, I think, will continue to shine, and most probably volumes creeping up higher. In terms of the driver of that, I think Finlay and I agreed, as it sounds, in terms of private equity being the kind of main engine for deals. Again, it's part of their business model. They need to do it. I think there's a lot of transactions in pipeline stage which will happen again this year and even more so next year. That will be both private deals as well as take privates, I believe. The IPO market, I think, is opening up selectively, again, for good businesses. It never really closed, but I think it will be even more open again at the end of this year and most probably more so into next year. I think we've got a significant pipeline across Europe of businesses that are ready to go, both from private equity ownership as well as or other organizations. And then maybe more in terms of kind of services, and I've flagged this quite a few times, but the kind of regulatory comms is more decisive. We mentioned all the different stakeholders that can impact deals, and regulators and the regulatory environment will be key. So, communications there, both from us and our clients, and allowing deal security and then getting deals across the table will be important.
Sure. And Finlay?
Completely agree with all of that. I I think if we take the private capital side first, I think there'll be continued interest from the big US private equity players. They are looking to establish more of a foothold in Europe, I think, just as we see that kind of transition that we described earlier in terms of European economies being a bit more inward looking. I think you'll find some of the bigger international private equity players trying to set up offices across Europe, maybe acquire local teams, things like that, so that it will allow them to do those deals more effectively. But I think what that also means is that there is a comms challenge in terms of bringing your US private equity business into Europe. It's clearly a different market with a different set of complexities. So there will be a challenge in supporting them. I think, as Ollie alludes to, there will be IPO activity, but it may well not be in London. I think you might see businesses that are looking to IPO in Europe may look at other markets, may look at Euronext and Amsterdam and other places. And I think clearly as the US market recovers, there will be, I think, a return of listings in the US market as well. I also think we'll see a general return of deal making. I think will also boost areas of the market like private credit. I think the amount that market has grown over the last few years as banks generally have retreated from those, supporting the private equity deals and those sorts of things. So I think that part of the market will continue to grow. And then, as Ollie says, regulatory scrutiny is something that gives us an opportunity to flex our muscles a little bit from a comms perspective. So I think as areas of the market like private credit and private equity become more prevalent in terms of global M&A, there will be increased scrutiny from a broader range of stakeholders, which gives us a great opportunity as comms professionals to provide that kind of full service offering that we've been referring to throughout the conversation.
And I think we've been speaking mainly about M&A, but also IPOs, but there's, also restructuring in terms of transaction work, which will come into play very significantly. I think most of us were expecting more restructuring cases over the last few months and years. And in fact, I think we thought it was going to be a major driver of activity. Obviously, we're seeing quite a bit of that, but I'm assuming that we'll see much more in the coming months and years ahead of businesses which have been struggling over months and years and unfortunately won't be able to kind of move on in current circumstances. And obviously communications here will be critical, most really even more critical to kind of safeguard some of those businesses and find new homes for them and maybe supporting a financial or organizational restructure.
Yeah, makes sense. One supplementary question actually about the sort of UK stock market. Obviously, there have been well-documented difficulties, challenges there. What are your thoughts for the sort of UK IPOs in the sort of coming rest of the year and beyond?
I still think it's going to be extremely challenging, if I'm honest, where you have undervaluing of stocks in the UK. I think that you'll see a lot of company owners, investors, etc., pull back from it slightly. And I think they may look to other markets, perhaps look at secondary listings, and they might look at Amsterdam and Paris and other places. I mean, there will always be IPO activity in London, but I still see it as being pretty challenging for the rest of this year. Maybe we'll see a bit of a return next year and beyond, but yeah, the second half of this year I still see as being quite challenging, to be honest.
Unfortunately, I'd have to agree. I think there's one or two IPO transactions in the waiting which could make a difference, and if they are successful and kind of open up a window for others, and I think we could see a flurry of activity. I don't think we'll be going back to numbers that we've seen historically anytime soon. But as we've pointed out, its IPO market now is global, and there's a global kind of sense to it. So if it's not the UK or London, and it's others, and I think consultancies and agencies that have services in those regions will benefit. Well, an IPO is never just a UK communications job. If the IPO happens in a different market, then obviously the cross-border transaction element of it is so much stronger.
We don't want it to all be doom and gloom. I think, as both Ollie and I have suggested throughout this process, there are always good companies that are performing well, whatever the sector. So when you have quality companies that are performing well, they will see an IPO as a viable exit route. So there have been examples, and there will continue to be examples, of good companies that choose London And then rightly it's celebrated as the headlines are all about, return of London listings. So that will continue to happen. I just think it'll be fewer and far between than it has been in the past.
Sure. No, all makes sense. And that's all the time we have, unfortunately. Thanks so much, Ollie and Finlay, for your great insights. We really appreciate it.
Thank you very much.
No problem. Thank you so much.
And
thank you for having us.
No problem at all. And thank you to Siobhan, as always. And thanks to everyone for listening. Until next time, goodbye.